if you have something to do in 1 or 2 hours, I would close this video and go do whatever you're supposed to do. Because this video is going to be probably extremely long. Um, so before I even start this video, I just want to say, and I really don't like doing this, but this is what brings my community together, and this is what, I find, the right thing to do is being honest. And I think being honest with yourself and honest with your community is quite important as a content creator and obviously as a day trader. I don't want to sound corny, or I don't want to sound like I'm sad. But these past few weeks have been extremely tough in terms of mental toughness with trading. It has been probably the most crucial year for my trading and the pressure of trading to be good or to get good and to get better and to actually start making profits. If you guys didn't know, I'm a junior in high school, and I know a lot of you in the Discord can probably relate being young and being young and money driven. I don't want to share too much of my story because I know that doesn't really matter. Everyone has their own personal stories. I'll share mine when I'm successful, but not right now. But the money driven part is the stressful part. I am so focused on making money at a young age, and I found day trading as an escape to make easy money, as people say, right? You find out really quickly that that is not the case. You find out really quickly that you will spend 2 to 3 years losing money. You will spend 2 to 3 years losing sleep, and I'm not joking. You'll spend 2 to 3 years losing things in general. You will lose a lot, and some people will even quit and then lose completely, lose the whole battle of day trading and their mental health and physical health and everything. Now, to me, this battle itself, and every day trader goes through it. This battle itself has been extremely rough, especially these last 2 weeks, as I've put more than enough pressure on myself to keep going and to keep trading almost every single day. There'd be times where I would be telling myself not to trade that day because it's not a profitable day, or there's less confluence, or the setup isn't there, and I would end up taking a trade. And that's because I feel like I'm falling behind and that I need to make money the day of. And I think that is also causing my losses. And the more losses, the more stress, because you're like, oh my God, I'm losing. I'm also falling behind. And so you're like, I'm falling behind, so I need to take more trades. And then you lose. And then it's a whole fucking cycle. So this has nothing to do with the trade today. It doesn't have to do with anything, but all I want to say is from the community I have, right, with over 100 members in the Discord, I think that being honest and being truthful with my community is probably the best thing I could do in these moments. Like I said in my previous videos, I'm not famous. No one knows me. I'm not super profitable to the point where I can buy mansions left and right. I'm just like every other kid that's trying to make it out the fucking 9 to 5. Dude, that's corny as shit. I'm just trying to get rich, but that's also corny as shit. All I'm trying to do is get a little bit of extra cash. I have a few business ideas to open up when I'm older, when I'm 18 and stuff like that. It's hard. That's all I'm saying. Day trading is hard, and I want to share the journey with you. I want to be completely honest. And I know people look up to people that are successful and they think it's easy to just be successful trading, business, real estate, whatever. But nobody, or maybe some people, don't tell you how hard it is. And especially no one my age is being this honest and this transparent with someone your age too. right? There is probably someone right now listening to you right now that is 17 in high school, probably the exact position I am in, listening to me saying that day trading is hard. It will take you years. The younger you start, the better. And this is a commitment. I have gone so far into this that I cannot come out of it. Not saying I'm addicted. All I'm saying is that the skills I've learned, the discipline I've learned, I can't go without it. And I feel like I've gone so far already that if I quit, it's like, why would I quit? There is still so much potential on the table. So without further ado, let's let's get into the trade of today's. So yesterday we had FOMC, as you guys know, on Wednesday. Yesterday we had PMI. On Wednesday we had FOMC. If you guys recall what happened on Wednesday, right? FOMC is this candle. We're on ES, by the way. FOMC came up, came down, manipulation. Wasn't too worried about the levels. But basically what happened, and this is what happened, right? You have Wednesday, Thursday, Friday. Friday, right? So news. 3 days in a row where you have news. Problem with that is that there's not only a lot of manipulation, but there's going to be a lot of accumulation before those news events. And then there's going to be a lot of distribution. And the biggest thing is going to be the profit taking. Now, the profit taking part, and this is what a lot of traders don't even know. When you're trading live markets with live hedge funds, trading this real time, because a little disclaimer, ES, SPX, the S&P 500, NASDAQ, and Dow Jones basically all have all-time highs right now, or are in the area of making all-time highs basically every day. So it's very like manipulative, very distribution-like to happen, okay? So there's a lot of buying, there's a lot of selling. And when a lot of buying happens, people want to sell their position, as you can see right here. We'll talk about this in a second, but people want to sell, and this is the pattern we look for. Anyways, FOMC happens. Usually with every single FOMC, once it goes down, it always comes back up. Once it goes up, it always comes back down. You just can't change that. That's how the market goes. It gets rebalanced pretty nicely. As you saw yesterday, we took a couple losses down here in this accumulation phase. As you can see, this is probably the part where you don't really want to trade. You want to trade the proportion off, and you want to trade the redistribution. Now, did we expect price to run up all the way up to this buy-side liquidity, which isn't really buy-side liquidity? It's actually just a -4 standard deviation leg. I'll show you on the daily, because this is where it really is. You can see the daily market structure shift. You guys know this by now. -4 standard deviation. This is all-time highs. So let's go back on ES. You can see that I'm pretty sure this was Thursday. Yes, on Thursday at 4 p.m. out of nowhere, we just skyrocket up, and we hit, and look at this. We hit this leg by barely a tick. Look at that. We barely sweep it by a tick. Isn't that crazy? How this little tiny level that is in thin air, that is a prediction, predicts this little price level. So yes, I swept this. You could predict that. But I predicted the exact price level it would target. Just saying. Okay? So that's one. The second thing is, whoops, that's my headphones. Once price comes down, you can see, again, accumulation, the same in here. Or not really, right here. Same happens here, right? Accumulation. And so after accumulation, what do you usually have? You have some kind of manipulation and then distribution. So here, what are we expecting? We're expecting accumulation, manipulation, both sides, distribution, both sides. Okay? So on ES, what were we watching? There was, today was the big day of NFP. There was a lot of confluence with NFP. You can see the accumulation is just absolutely crazy. I know some people took trades off this. Personally, I didn't even look to trade this NFP. I was looking to trade either before or after. As you can see, we did take a trade that was extremely risky, but I took it again because I was greedy and I wanted the money. I'll talk about that in a second. But what were we looking for in the higher time frame, or the lower time frame analysis? Let's just go to daily real quick. The daily on ES, you can't really do any analysis. There's so many gaps. I don't even want to go there. But the 1 hour, it shows us just on ES, and I'll go to NQ in a second because NQ is going to come and play. On ES, you have this big range that gets created, obviously, from Thursday, right? I'm going to go from this mother swing low to this mother swing high. And I'm just going to draw the range, right? So where's the range? Where's our equilibrium of that range? Personally, I was hoping that news was a little more tough on us and would come down and trade into not only these imbalances down here, but this imbalance in particular with this high, and be under equilibrium where you could see more buying option, because I knew that price was going to be bearish, or I didn't know price was going to be bearish, but I knew if price was going to be bearish, we would have a bullish day. Doesn't make sense? It does make sense when you've been trading for so many years. Even look at this. We had a bearish FOMC day, and we had a bullish Thursday. We had bearish news on Thursday, bullish day. Took out this bearish and this bearish news with bullish price action. So I was expecting definitely a retracement with this news candle. The only thing I didn't expect is this news candle to stop here on ES, but and even reach for this low at all. At least the news candle, this low did come down into this imbalance, but that's not important, because what's important is when you look at NQ, which is basically the brother of ES, there's actually a pretty big balanced price range that is happening right here, right now. Now, let's go back to ES for 1 second. You see this gap right here? Looks pretty small, doesn't it? Let me just mark it out for you. It looks small. It doesn't look like much. And that's right. It isn't really much here, right? But when you look on NQ, it's much bigger. There's much gaps above here. And there's a lot more volume and a lot more orders to get filled here. Now, guess what's funny? You know what a balanced price range is? It's when a bearish or bullish, in this case it'd be a bearish fair value gap, gets completely traded through with a bullish fair value gap. That's it. So what do? You mark the bearish or whatever fair value gap is created first, that gets broken, and that's your balanced price range. So whatever that fair value gap here, that bearish, it's not a bearish fair value gap anymore, right? So see, this got respected first time, but didn't get traded and it didn't close. But look at this. This wick does not come close. This body trades from down here all the way up here. And it doesn't close here inside. It closes all the way up here. This wick doesn't come out into this. So to me, this is a valid, balanced price range. So instead of taking this 1 hour fair value gap, which you see here, I would take the one that's out here, which isn't less accurate or more accurate. It's just the more, it's just the balanced price range. Now, you can see on the news, this news candle on NQ, because NQ is very, very volatile. It was a little more volatile on NQ. Straight down. I'm going to go to the 15-minute on NQ just so you can see straight down. 8:30. Boom. Now, in this balanced price range, yes, there is more bullish fair value gap. Now, what I was waiting for is this balanced price range to be swept out, right? To be to create a low down here, and not really trade inside, or it did trade inside this imbalance, but there are so many little imbalances that this was the biggest one that I was looking for. So you could even mark this out, just the bullish fair value gap, and you can see when you delete the balanced price range, this is still in it. It didn't quite sweep the low, but it did come down to the consequent encroachment. And look where the body closes, all above, all above. So you see that on NQ. Let's go see if that happened on ES, though. Again, 1 hour on ES. Let's go to that balanced price range. Look, this is the big fair value gap we're looking at. Remember on NQ, the big fair value gap was right here. But on ES, it's this little tiny thing. What, tiny? It's all right. Still, this is a balanced price range. Yes, it is. It is a very nicely balanced price range. The only problem is it's a little small compared to this 1 hour imbalance. So if you were to go to the 15-minute, right, and you do the same thing as NQ and be like, okay, well, where's the 1 hour fair value gap? You'd be, okay, well, in this balanced price range, what's the only fair value gap I see? Okay, it'd be this one. Okay, so what do? You mark it out. Now, what does the price do? It trades with NQ. NQ is a little stronger than ES, so ES is going to follow. Guess what NQ does? NQ goes a little lower, and it trades to the consequent encroachment. So NQ's consequent encroachment is right here, remember? So that's why we trade lower. So when you're trading with NQ or when I'm trading with ES, what I like to do is I like to look at what NQ is doing first of all. I do all my analysis on NQ first, and then go to see if ES is doing the same thing. Because if NQ is leading the pack in that moment, especially with news and those levels, it's important to note that NQ will have the lead of the pack, and it will lead ES to whatever price action it needs to. So what I was looking for is obviously, like I said, if we have bearish news, what do we have for distribution? We have bullish distribution to fill all those imbalances, right? We're not looking for a freaking sell model down here. We're not looking for like an OT. We're not looking to go short here because we saw a buy model. Let's go to ES 15-minute. You can see there's not much happening down here. You might see there's a doji, but again, you're never, after all these candles, bearish candles, there's no way you're predicting that price comes down to this exact level and reprices. So I'm going to just go to the 5-minute just to see what the market structure looks like. Okay, as you can see, this is pretty scary because it comes down here after news. There's the news wick, the news candle. It reaches back up a little bit, and then it dumps again. And this is where it's scary, but it also makes sense to have a buy model. It descends, descend. This is usually the part after news is where the profit taking happens. So people realize, and the hedge funds all get out, and then retail traders go, okay, shoot, everyone's out of the market. I better hop out. So what do? They all hop out the market. Okay. This is where it's important to have some kind of level. Whoops, that is not the right thing. It's important to have some kind of level like set. Unfortunately, as you can see, I didn't have any levels at all, right? Literally just in the blind. So looking for a buy model just in the blind is a little bit scary. But if you have the psychology behind saying there's people taking in the profits, we have basically the rest of this imbalance trying to get filled here. That's what we could be targeting, and there's buy side up here. And then your buy model could literally just be from this low or whatever low it creates to from this low to this buy side. So that could be your buy model. That's literally all it could be, because theoretically, if you're thinking logically and you've been trading for a while, this price move, this price range, or price move, this price move has already happened. It's already gone down. The only thing, there's two things that price could do. It could consolidate, or three things: consolidate at this level, go lower or go higher, or it can come back, enter this range's equilibrium, which is right here, and then it can go back down. Or it can do what it just did today. It can trade up, hit the equilibrium, sell off a little bit, and then we'll talk about the bullish SMT that happened with NQ. And then it goes all the way back up to grab the buy side. And then from there, you're out of the market. You're done. Okay? We'll talk about what happened. And that was basically the psychology, right? It already pierced through this. So this is almost like it can trade in this whole area. I want you to imagine this. This whole area, you got to really think like this. This whole area, this whole green area is tradable. Up. Down would be piercing into new levels, right? It would be sellers would need to sell even more. But buyers and price takers, or I guess profit takers, can now sell the position. Buyers can come and sweep their position and come buy the market. And they have this whole area, this whole green area, right? Because of this price movement in this leg down, they know that this whole area here is either filled or can be filled with a bunch of green candles. You know why? Because it's easier to buy when it's already been sold, right? Okay. So if you were to look for a buy model, remember this low was created at 904. Market opens at 930-ish. So right here. Maybe a minute after here. Okay, so where's the buy model on ES? So right now it might be a little hard to look for, but basically all I'm watching now is just that mother swing low. Now, if this low here gets created and it gets broken through, and price does something like this, right? It comes up, comes here, and then it comes down back here. That's fine. And this is our new mother low. This is what we're watching now. And if guess what? If price comes down back here and it breaks again, then guess what? That's fine. That's our new low down here, right? This is our low. From this low, I always do the standard deviation. From this low, where's our internal swing high? Or my bad. Yeah, internal swing high. Where's our intermediate term high? This one. Okay. Now, the beauty of this is we have a 1 minute bearish SIBI that gets created right here. Oops. And this high, as you can see right here, trades into it, right? Almost like a institutional order flow entry drill, almost like it, but it's not quite like it. Okay, this little price leg determines the prediction of price. As you can see, once you draw the standard deviation, you can see that the levels already line up perfectly with what I want to target. Personally, I was looking to target this buy side liquidity, again, because this whole pool of liquidity has already been created, and it would be very easy for us to not only buy back the news, but buy back this whole price leg itself. Negative 2.5, where does it line up? It lines up with that high. That's what we're going to be targeting, okay? Cool. Let's talk about the entry, because it was a little sketchy, and it was definitely a little scary, but let's talk about it. You can see I've been missing my entries because I've not been catching the first fair value gap or the first price leg movement. In this scenario, this movement is so small that I knew I was going to get my entry early. There's 1, 2, 3. It's literally a 3 candle move. That means that the range itself, the range is 4 candles because that high, but the 4 candle range, when you draw this from the swing low to the swing high with your range, you can notice that right away the range is so small and there's only one fair value gap, right? The equilibrium is here. Let me try to make it visible. That black little line in let me just do this just so it's easier for you guys to see. Oops. That black line is equilibrium. Anything under there, we can start buying, right? That's the 2022 model. What do you notice on the 1 minute? The first like fair value gap that gets created, to me, it was a little hard to see, but I saw this, right? The high of this and the low of this wick. It's also a volume imbalance. Isn't that crazy on ES? Drag that out. Look at this. Isn't that crazy? Look where the body closes. Isn't that crazy? First of all, they close like 1 or 2 ticks away from each other, but they don't close in this fair value gap. Or actually, where's the low or open of this? 49.29.0. What's the low or what's this? The open? No, this is the open. This would be the close. Close is 49.29.0. And the open on this, 49.29.0. On this level, it does not close under 49.29.0. That, my friend, is why I believe ICT's concepts. This wick, what does it do? Look at the wick, the low of this wick, 49.28.75. This high is going to be exactly the same. Watch. High, 49.28.75. What? That cannot be right. This wick hits this level perfectly. Then price trades down. Then, if you were like me, you got your entry at, it doesn't matter. This is a fair value gap, consequent encroachment, even if it's so small. Now, remember that one time I told you guys that you'd put your stop loss here, it doesn't even let me, but you put the stop loss like at the bottom of the fair value gap if you're not using the OT. Well, I mentioned in another video, that's not always what you want to do. Sometimes when the gaps are this small, which is very small and it doesn't get respected all the time, you want the stop loss at the low, okay? Because what I'm saying mentally, and this, listen up, stop. If you're like making the video fast, I'll give you 10 seconds to just pause it and then go to normal speed so you can listen to me say this. When you're taking this trade, and I just told you, it is risky because this low it just bounced off because of NQ. So if NQ decides to go lower because of whatever reason that we're not looking at it, then ES will do the exact same. So ES will get its low broken, which will create another swing low, or the lower low, which will probably create another buy model if it happens, because we have to, again, buy the news and buy the imbalances back. So I personally am willing and I'm mentally prepared for price to trade back down to this low and break it. And if it does, I don't care, because that's exactly what I had planned, for that low to be broken because of my mental awareness of the market. Okay? So the low is not at the wick. It's not there. It's not at the gap. It's at this low. It's not a protected low. It did not react off a high time frame PD array. It didn't react off any kind of PD array that I've personally marked. And if it did, then I missed it. But personally, after news doesn't quite respect every single time, like every 1 minute PD array, like to the dot. And that's experience. So usually you just kind of go off, this is kind of random. You just kind of go off what it gives you. And this usually happens in accumulation. As you see, I was expecting for price to go up, go down, go up, go down, right? So what happens? You can see price immediately, and this is good, immediately rejects. And what does it do? Fucking ads. It takes out this high, which is the range high, if you want to call it that. It takes out the ranges high of our entry, which is good. Doesn't close above it. Would like to see it close. But this is where I started shitting my pants. It comes down, it comes down, and it comes down, and it comes down. And we're in drawdown. And it comes so close to our take profit. And this is where I accepted. I was like, okay, I'm not going to close my position because you never know. You never know. So I forgot to mark this. There's internal sweep. So that gives you even more confidence to enter your longs here, by the way. Okay. Oh, and this one needs to be in the middle. Equal lows. That's all I got to say. Equal lows. When I saw that, I was like, this is not going down. And if it is, I lost, whatever. Propulsion off. I was waiting for this to, kind of go break even and break that high. As you can see, it did a few candles after. This candle right here was like the deciding candle of the whole range. Was like, okay, we're going away from this level. This took us from our drawdown, remember, drawdown, into profit, almost like out of this range. So this was the candle, deciding candle of like, it's either we go down or it's either we go up, right? Now to take profits, if you had multiple contracts, you'd probably have first take profits should be somewhere here, -1, right? Be smart with it. And then my final was that high. So yes, it would have been the 2.5 if I followed, but I said it's so close, that price, it just knows it wants to reach that high. So why not just target that high in general, okay? And from there, the rest is history. Now, the only thing I was worried about is the 9:30 opening. As you can see, at 9:29, we have that expansion or the distribution of that candle that I just talked about. And the 9:30 opens, and this is where I was also shitting my pants. I was like, holy shit, I'm in a trade during New York Open on my funded. I am so fucked. I was not fucked. It did come down. This is where I was like, oh fuck yeah. I mean, we might as well just sell the position. It's gonna break our lows. It's gonna sweep. It's gonna manipulate down. I was gonna see this, I literally saw this. It's gonna manipulate down to those lows, that low, sweep out of there, not create a buy model, and I'm just gonna be done for the day. And we're gonna cry. It didn't happen. As you can see, when I tell you when price wants to go up or when it wants to come down, it will do exactly what it wants to do. What did price want to do? It wanted to rebuy the news as soon as possible, and it wanted to, guess what? People took their profits down here. So guess what? Buyers, 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 buyers. Lots of sellers selling. Lots of buyers buying. Why would there be so many sellers after buyers buy? I don't know. There isn't. What do you target? The highs. You can see it runs up to the high. And I'm pretty sure there was news also at 10 a.m. right here. So this was the current trade that I had, and I was debating of getting out. But when the price came down, right, I was like, so first of all, you already have your profits taken right after 9:30, right? You could even take profits during 9:30 or before or after. I don't know. It doesn't matter, but at least be more than break even or be in profit before 9:30. Now, 10, I waited for 10. Let me check the news real quick because I'm pretty sure, let me go here. Because I'm pretty sure 10 was not, what do we have? Revised UOM consumer sentiment. Yeah, I didn't think that was going to be big impact at all. It actually changed 0.1%. So when I saw that, I was like, that's not bullish. It's not bearish. It's not going to affect us at all. You can see the 10 a.m. candle. Literally nothing happened. When I saw that though, I went like this. I'm going to extend my shit all the way up here because it's not going to take us out. It did come back down, but as you can see, fair value gaps, order blocks, rejected that shit right back up. And you're watching this, right? I'm watching this live. I'm like, I'm in class. Actually, no, we had a fire drill. We had a gas leak today at my school. So this happened like basically during my gas leak. So I was outside watching this live. I was like, holy fuck, I'm stressing. Yeah, we had a gas leak. I almost fucking died. So, anyways, yeah, came up, hit our take profit beautifully. And this is where you're out. You're done for the day. You're good, right? Well, after I did this on my funded, what did I do? Oh yeah, I waited until, I don't know, the fucking end of the day to trade even more, thinking that this bitch would go even higher and reach our negative 4.25 standard deviation leg. So like a dumbass, on my funded account, I went and lost all the profits that we've made that day. And I've lost $100 more. So I'm now negative $100 on the account. And this is where I come back to the mental part. And I sound happy doing these fucking videos, but I'm dead inside, bro. Listen, you probably understand the pain. I was up $1,000 on the account. $1,000. And then like a dumbass, I got fucking greedy. I got greedy for more. I wanted more. I wanted more money. And I said, I'm actually so confident right now because I know where the market's going. It wants to go higher. So I buy call. I just buy here. The worst thing could have happened. First of all, I buy even though there's absolutely no model being shown. My strategy is not there. You know what I should have done? My laptop's open. Now it's closed in my backpack for the rest of the day. My phone closed. I should have deleted TradingView and Webull. I should have just deleted it off my phone so I just physically cannot trade and see the charts. That's what I should have done. I'll do that next time. Because of the greediness, I went long. I was up a few hundred. And then guess what? Accumulation. End of the day accumulation. Yes, it went up for the whole day, but I buy when it goes down. I buy, and I didn't talk about this. I traded this whole thing. I started here, bro. This whole choppiness action, this is what I traded. Basically up here, I bought. And it came down, I sold, then I sold, then I bought, and then I sold that, and then I bought even more. Cool. And then it comes down, and I was like, fuck. So I sold because it's going down, but then it sweeps the low and then it comes up. So I sold here because it's going so down. So I sell and then it goes up, 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 up. But I was selling and then I didn't hold. So I bought and then I sold and then. What the fuck was I thinking? This is where the mental challenge comes in. I've been doing this for more than 2 years now. 2 years. Sometimes people think I'm super mature with how I handle my emotions and my money. And sometimes people tell me, you're a kid. You've never touched $1,000 in your life. And it makes sense that you want to make more. You got greedy. You broke every single one of your rules. And you lost money because of that. That's the dark side. The good side, and you might be saying, there's a good side to this? Yes, there is a good side. The good side is that it happened. The good side is that I learned from it. And the good side is I'm making a fucking video out of it. And it's going to be in my notes. And it's going to be something I will reflect one day. Would it be Monday, Tuesday, Thursday, Wednesday, fucking Friday, back to Monday? I don't know. It's going to happen again where I make a lot of money. I'm going to get greedy. And there's two things. I could do it again and lose money, or I can follow what I've taught myself and never break those rules again, ever again. Stay with that money and do it all over tomorrow. Have a good weekend. Stay safe, and I'll see you guys on Monday. Peace.